Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi everyone, welcome to Top Stock Picks of the Week. I'm Neena Mishra. I'll share my top stock pick first, and I'll then be joined by my colleague Brian Boland, who will be talking about Nvidia, the most important company in the world, which is reporting this week. My pick is not as exciting as Nvidia, but still an important company. So my top stock pick today is Ralph Lauren, ticker symbol RL. So let me share my screen and talk more about this company. So we all know Ralph Lauren is a designer and distributor of luxury lifestyle products. And we have seen from the recent consumer reports and consumer companies' earnings reports that we have a K-shaped economy, which means that wealthier Americans are spending more, and their wealth is boosted by stock markets and rising home values, whereas lower and middle income consumers are spending less. So that benefits companies like Ralph Lauren because upper middle class, and wealthy consumers, they are willing to spend more on luxury items. And in fact, Ralph Lauren has said that they have reported that their core consumers haven't pulled back on spending at all. In fact, the company has been raising its average prices for its products, but their prices are still relatively lower compared to peers like Louis Vuitton or Dior. So that is why some consumers, like particularly upper middle consumers, feel that they are getting value for their money. Now let's talk about the recent results. So second quarter earnings, they were great, up 49% year over year, and revenue was up 17% year over year. Same store sales were up 13% versus 6.1% expected, and they raised their fiscal 2026 guidance to 5 to 7% of revenue growth and margin gains. And this company has seen nearly 5 years of consistent growth. Now, let's go to the quote page on Zacks.com. This is Ralph Lauren. It is currently a Zacks rank number one strong buy rated stock. And I mentioned the excellent results. So you will see, if you go to detailed estimates, you will see that analysts have raised their estimate for the current year and next year after those excellent results. And that is why the stock has become a Zacks rank number one stock. Now, looking at the longer term price consensus and EPS surprise chart, looks great. All greens in the last 5 years. The company has not missed even once. Now, one more thing I wanted to mention, and the CEO talked about it at a recent earnings call, that core items like cable knit sweaters, polo shirts, and tweed jackets, they make up about 70% of all sales, and remaining 30% are more seasonal items. And many other consumer companies, they have to change their offerings a lot. Particularly, they have to change their offerings almost every season. And according to their CEO, Ralph Lauren CEO, that confuses the customer. And and for the retailer, sometimes your seasonal offerings are a hit and sometimes they are not a hit, and that impacts the results. So Ralph Lauren is benefiting from the consistency and popularity of its core offerings, and they have also been investing in technology and also AI tools. In fact, they recently launched a conversational AI powered fashion styling helper for users of their AI app. Now, the stock is up 42% year to date. It's done very well, but because of all the reasons that I mentioned, and also Zach's ranked number one, it is worth a look. And I will now hand it over to Brian and hear him talk about Nvidia.
Thank you, Nina. That was a great top stock pick for the week. I'm Brian Bolin, and I'm the aggressive growth stock strategist here at Zacks. And my top stock pick for the week is the one you've all been waiting for. It's Nvidia. What's going on with Nvidia? Is there an AI bubble? Quick answer is no. Let's go through the stock and take a look at and see what I see when we're looking at Nvidia. All right, so number one, we have Nvidia is the name, and NVDA is the ticker, as you all know. It's a Zacks rank number 2. That's a buy, so we like either ones or twos. Strong buy or buy. B for growth, D for value. I love to see the growth divergence here. Strong growth score, a weak value score tells me I'm on the right path. And earnings are what this is going to be Wednesday after the close, the 19th. After the close, we're going to get earnings. And we're going to key in on those earnings in just a minute. But let's take a look at what they've done in the past, shall we? That's the first thing that we do when we look at a stock. We say, how have you been reporting? And we can see a beat, a small miss of 4 cents, and another beat. But you can see these beats are 6 cents, 5 cents, a miss of 4, 5 cents. The analysts have kind of really figured this out as opposed on the cost end over the last year and a half or so, because before there were some really big beats. And now those beats have come in. But we can see the most recent estimate is a little bit above 128 versus 124. So that's what we're looking for on the bottom line. But as you know, I'm about the growth. The Zacks rank is all about the earnings estimates. And we can see this quarter has moved up from $1.23 to $1.24 in the last week. So it was $1.23, so a penny kick up. 137 holding still for next quarter. 445 going up to 448 for this year. Next year, 620 up to 630. So estimates all moving in the right direction, except for next quarter, I guess. But we'll find out how this quarter goes. Then we'll see what next quarter's like. All right, so we know that there is $1.24 coming for this quarter. Right there is your number. That's going to look at 53% year-over-year growth. Here's the sales number that we're looking for. It's $54.6 billion. That's 55% growth on a year-over-year basis. For the full year, they're looking at just about $205 billion and 57% growth. And then growth slowing down to 35%, just $275 billion. There was a time, though, we were seeing well over 100% top-line growth for Nvidia because of the surge of buying. And does this mean that the surge is over? You're at 55% on a year-over-year basis. That's still extremely high. So it is not all of that. So let's go ahead and take a look at all of our other numbers that we like to look at. And the first one is going to be price to earnings. So we've got a 42 times price to earnings multiple, which is pretty high, but considering the value of the company and everything else, that's not that crazy. You know, a nifty 50 multiple is still a reality. You're posting huge growth of 55% on the top line. So that price to earnings ratio is not that high. The price to book is a little bit high. And, you know, as much as Nvidia can move these chips, it's still a little bit in asset heavy, a little bit asset light, a little bit asset heavy. So still at 46 times book, that's a lot. And the story here then, of course, is the margins. They're holding it around 50% on the operating side. We need to see them kick just a little bit higher. A little move here would make a gigantic impact on earnings. All right, so now we're going to run to the chart that we always look at. The first chart that we always see is the price and sales consensus. So you get to see everything. You know, have they been beating? The green dots are beats, the reds are misses. We can see we're on a great run here. But let's do the way that we always look at this. 2022 was the tech wreck, and can you even tell that this stock went down? You know, all these splits that the stock has kept on pushing these things lower. So, you know, you can't even see the true movement there. and then up and away, Liberation Day, and then from Liberation Day we've just really run. Now we're going to take just a look at, I'm going to thin out my ball here, my pen, so we can see these arrows of the estimates. And you can see the estimates are moving up and away, especially this one. This one's giving me a nice trajectory out there, going to $6.30 next year. So that is all looking good for Nvidia. Now here is our big chart that I want to focus on, and this is the stock price and quarterly revenue. All right, so if we're looking at this, the most recent quarter was 46. We know that we're going to be at 56. That means we can extend this line to right there. The trend is continuing on the revenue growth. Might have slowed out just a little bit. There might be a little bit of a smaller move up, but it's going to get over. This is it's 56 billion. I know it shows 46 something as the most recent, but we'll just keep that as a mental note. 56 billion. So if that revenue line continues, you're going to have opportunities in here to buy the dip. Didn't you wish you bought that dip with everything you had back on Liberation Day? It was pretty scary. Very few people did, but those who did, great. And then up and away. And I think it continues moving higher. And I think that is the end story for Nvidia, that the revenue growth is still intact. This is not a bubble. There's going to be continuous demand for increased computing supply, increased chip demand. There's still plenty of demand in Asia. China wants those chips really bad. Are they going to get them? Maybe after a while. So the customer idea still stays intact. It might be almost a delay for revenue in that case. So I'm a believer that Nvidia posts good numbers, gives good guidance, and everything continues as the AI infrastructure build out continues. All right, that's it for this week. Be sure to join us next week when we got two great top stock picks from two of our great strategists. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.